Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have my great friend on the program, Mr. Al Connickson. Al, we are in a new studio today. How are you doing?
Yeah, we're moving up in the world. Glad to be in the new studio. Glad to be on the air.
Yeah, I almost brought the Joey Tribbiani back one more time with the how you doing.
I figured that would be coming up again soon.
It's always great to be back, helping our Retire Young family make better investing decisions. Al, we got a packed show today. We had another phenomenal market again this week. We had some great moves down, which we talked about last week a little bit. We're going to continue that discussion, but we're really on a mission today to help Minneapolis, or in Minnesota, just with the financial literacy. So, Al, as we get into this show here today, what is happening with these financial markets? We're seeing some great down movement, which a lot of people think that's a bad thing. We're going to talk about today why that's a good thing, but also we're going to talk about up markets as well. So what's happening? How can we participate and still take part in these phenomenal markets?
Yeah, I'm sure there are some people listening that are saying, oh, he made a mistake there. He used the word great. He didn't mean to do that. No, that is true. Markets go up, markets go down. It really doesn't make any difference. They're just opportunities in different directions. And, a lot of people really got kind of sucked into believing, I think, that this market was going to continue to go up because it was for a long period of time. Pretty much, not everything was going up, I will say that. It was basically the technology stocks and a handful of those that really drove this market, and some of the coronavirus-related stocks that really drove this market. Now, all of a sudden, we've had 3 back-to-back weeks where the market has been down. And it's not a bad thing. Again, I just want to emphasize it's just an opportunity in a different direction. And it all gets down to what we talk about every week, and that's financial literacy. And a lot of people that are listening, maybe even most of the people listening, Josh, probably fall into one of 3 categories. They're either not in the market and they're thinking about getting in, or they were in the market and they're not in the market now, or they're in the market and not consistent in their returns. And people typically stay in one of those 3 categories because they're afraid. Their fear is there if you don't have the knowledge of basically anything. I mean, if you took me to the airport and put me in the cockpit of a 757...
I am not riding with you.
No, and I'm not going to go with either. But, and you told me to take off and fly somewhere, I would be scared to death. I couldn't do it. Well, the same thing is true in the markets. If you don't have the knowledge there, that fear keeps you out. So it's the knowledge. That is the important part of it. And then also, there's so many things going on. We've got the coronavirus issue, the economy starting to slow down a bit, the growth of the economy. A lot of companies have gone into bankruptcy. We've got the election issue. And people, I think, assign too much importance to each event, and they try to figure out what the market's going to do based on those events. This is the important thing. You trade what's happening, not what you think is going to happen or should happen. We can't control that. But when we're addressing the what's happening part that you need to follow, it's the big banks, it's the institutions, the smart money, Goldman Sachs, JP Morgan, Warren Buffett, hedge funds. Those are the ones that are making it happen. So the question then is how can a trader or investor take advantage of that reality? And it starts with a basic foundational strategy that you can use regardless of the market direction, based on that smart money activity. That's our core strategy, followed by an understanding of what assets they're using, and then gaining the knowledge regarding those assets and building the skills to use that knowledge.
Yeah, and I just want to reiterate that, you said earlier the opportunities in multiple directions, because, you look at the chart, the prices right now, the S&P 500 is actually down roughly 7.5% from its highs. Well, what is the average rate of return for the average investor? It's actually a little bit lower than that.
It's lower than that.
So these drops are phenomenal opportunities, and think of these as opportunities, not as a bad thing. And Al, when you talk about these opportunities in up and down markets in these investing classes, it's really helping people open their eyes to see what is really possible. Al, we have a lot more to discuss today on Financial Literacy Hour. I want to talk about smart money. And the smart money is the institutions, the banks. They are always creating returns. Well, the public doesn't always do that. So I want to talk about the disconnect from what the institutions are doing, but also what we can do as average investors to kind of jump on their coattails. This is Josh and Al with the Retire Young radio show. We'll be right back.